Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar's weekend webinar. All right, traders, as you know, this weekend has been serious. These markets are going to go crazy. This is the weekend webinar for September 28th, 2008. It is Sunday, and we thought we'd speak to you about a couple of things today because, as you know, I think these weekend webinars are unlike our nightly videos. These are geared for a little bit longer term view, and they are to help you keep the longer term view in focus. And with that in mind, I'd like to discuss euro currencies and where they will likely go based upon the Fed putting together this package with the Treasury and then most likely the Congress passing it. The US dollar index and what it should mean for the US dollar index. And then, of course, you have commodities and metals and what would a bailout package mean for them. First thing is first, I think this, bailout package, no bailout package, a market will go where a market is planning on going. If, in fact, this S&P wants to go down another 200 points, it is going another 200 points no matter what the type of intervention comes your way. The Fed can intervene and buy dollars, sell dollars. BOJ can intervene in their currency. It never stops the currency from going in the same direction it was planning on going. All it ever does is really stall it a little bit. So I think the bailout is more like a band-out. It's a Band-Aid bailout. It'll help for a few days, but then don't fall in love with the upside, traders. I don't care what they try and do. There is no way $700 billion is going to stop the problems that we're having. Sure, it should probably stop the run on banking. That is, all the individuals out there running to the bank going, I don't know if you're going to fail tomorrow. I'd like my money back. And I think I'll give you a brief explanation of why that affects each and every one of us people in this country and abroad. So I think that a bailout package will do nothing more than like Fed intervention in the US dollar back in the 80s and the mid 90s. It'll give us a little pop up in the S&P. You'll get a little glory out of it, and back down we will go. That is likely what will happen. But hey, while the Fed's doing it, you might as well take the jump. We're probably going to get a little pop to the upside. With that in mind, I had mentioned to you in a few videos, especially the one that we just did. We shot it for 9/26/08. We shot it Thursday night for Friday's trading. In that video, I said to you, traders, everything is set now. Currencies have had their little upward reprieve, especially European currencies, and now the downside should come. Well, lo and behold, that was on Thursday night for Friday. It's Sunday evening. Euro currency down 100 already. British pound on its way down with it. And dollar index getting a pop. We also talked about most likely gold would go down and commodities would go down if the US dollar pops. That, I believe, is what will happen if there is a package. Well, there is a package that we know if the package gets passed in Congress. Now, the likelihood is it will get passed. I never thought they'd ever get it past Congress, but hey, surprise, surprise, Congress may pass it. Now, are you wondering, why is Congress bailing out Wall Street? Why would they bail out Wall Street? They're just giving money to the rich. Two things I'll say about that. One is this. If you think that $700 billion is going to fix our problem and fix all those companies, not a chance. All right, here's a for instance. In the United States, right now, there is a $487 billion bill waiting to be signed, which will be approved by Congress. And that is for next year's defense contracts. Next year's defense contracts, that's almost $500 billion. You don't even hear about that, right? That's nothing. From what we can see, the Treasury and the Fed, they don't think that's anything. They're going to sign that bill. Congress is going to pass it. We're talking about a $700 billion bill to bail out the whole country. They're sending $500 billion just for next year's defense projects. That doesn't seem to be all that much money as far as the eyes of the Fed are concerned, or our government. So do you really think $700 billion is going to fix our real estate and our banking problems and stop the stock market from going down and put all of us Americans back to work? You know, come on, let's be realistic. But it certainly is going to give us a boost for a couple of days, and hey, let's trade that boost. Now, if you traders are wondering what it means and how does it affect all of us, I'm going to try to give a brief Simplified, I'll admit, explanation. Here it is. I've given this explanation live at my site a couple of times to try to keep our Omniacs in tune with what this bailout package means. Many people are saying, why give money to the rich? You're only bailing out Wall Street. Well, no, traders, they are bailing all of us out. You, me, my grandma, your grandma, they're bailing all of us out. And here is why. Let's say you go to a bank, you have $10,000. We could use larger figures. Let's keep this simple. You have $10,000. You go to any savings bank. You walk into the bank. Hi, I have $10,000. I'd like to open up a bank account. Oh, Mr. So-and-so, you have $10,000? Well, why don't you consider putting that in a money market? Tie up your money for 3 months, 6 months, 9 months, 1 year. Each level that you tie up your money for, each length, you can get a certain amount of interest, which is more than you'll get from your savings account. You guys in the bank, he's thinking about it. Oh, really? You mean if I tie up my money for 3 months, I can get 5% interest? And these are fictitious figures. I can get 5% interest instead of the 2% that you're going to give me if I put it in a simple savings account? Yes, Mr. So-and-so, we will do that. Well, I think I'll put it in the money market. Thank you. Well, what does that mean? The moment you do that, the FDIC no longer insures that account. You didn't put it in your savings account. FDIC insured up to $100,000 per depositor, right? Well, you've chosen a money market. You've decided to take a risk for more interest. Granted, banks will tell you and always have told you up until just a few weeks ago, money markets are absolutely safe and secure, and the worst that can happen is you'll still get your dollar for dollar back. Well, here's what happens. Here's how it ties in, how it affects everybody. Every one of those people that walk into a bank with that money, and every hedge fund and every other huge fund that instead of putting money in their savings account, puts it in a money market account, the banks take that money and give it over to Morgan Stanley's and Prudential Baches and Bear Stearns and Lehman's because they use that. That's corporate debt. That's corporate paper. Lehman takes the money and says to the bank, well, thank you very much. In 3 months, you'll get back your $10,000 plus your 8% interest or 5% interest we used as an example. So you went to the bank. Simplify this again. You said I have a deposit. They convinced you, or you convinced yourself to put it in a money market, not insured by FDIC. The bank takes all that money market stuff and gives it over to these huge corporations, and they use that money to run the day-to-day operations. They run their hedge funds. They run everything that they run. They make a lot of money, and they pay back the banks. The banks pay us. Well, what happens the moment the banks stop giving money over to these huge companies, Morgan Stanley's, Lehman's, you name it? They go out of business like that. They need day-to-day money to run their day-to-day operations. What's been happening is that there's been a big run on banks. People are running the banks and asking for their cash back. I want my money back. I want it out of the money market. I'll break my CD. I want my money back. If you do that, it stops these huge firms from having money to run their day-to-day operations, and they go out of business. Now, if they go out of business and they can't pay back the banks, guess who doesn't get their money back? You and me. That is how it affects everybody. That means you can have companies of every nature going out of business. Why? Because if we let those big Wall Street firms go down and they don't pay the banks back for all the trillions of dollars of corporate paper that they get, how are we ever going to get paid? Now, what the $700 billion is the government stepping in and going, you know what? Boom. We're going to insure the money market accounts as well as the bank accounts. They're going to act as an FDIC insurance against your money markets. You took a risk for more interest, the government's going to cover it. In essence, the government is saying that they're going to cover any of the companies that can't perform. Now, if they don't cover those companies, we're not getting our money back out of the banking system, and it will break down. I know that's simplified, but that is the basis of what is going on here. Did you guys back there understand that?
Yes.
Can you understand where I'm going with that? I don't want to get into the economics behind it because it can get confusing, but basically that's it. You put your money in a money market or a mutual or a 401k, it gets flipped into corporate debt. That corporate paper gets paid back and you get your interest. What if they can't pay it back? The only way they can't pay it back is if banks stop giving them the money to run the day-to-day, to run their day-to-day business, and then they can't pay us back. The whole system breaks down. So understand, traders, this is not a bailout of Wall Street. They wouldn't do it. This is a bailout for all of us because I would like to have a job tomorrow. I know you want to have a job tomorrow, and you'd like to go get your hard-earned money out of the bank when you're ready to buy something, a house, a boat, food, you name it. Wouldn't you like to be able to go to your bank and get the money out? Well, if we don't help these major companies, there is no money left for us to go and get. That is the big picture, traders. Be careful. Now, the flip side of that, the bailout package gets signed. Hopefully, they've already made an announcement that they've agreed upon an agreement. That's a good thing to come from our government. They've agreed upon something, right? If, in fact, it gets passed, the banking system gets halted a little bit, but better than that, we're day traders, right? Who cares about all that stuff I just told you about? If your money is in FDIC insured accounts, you're okay, right? That's a trading opportunity for us traders. As I mentioned in the video dated 9/26 last Thursday for Friday, if in fact they pass this package, there are 799 stocks in the United States that cannot be short sold. You can only buy them, or when you're selling, it's only to get out. That means the whole world's going to go, hey, I'm jumping on those 799 stocks, and rightfully so. They're mostly banking stocks. If the government's going to bail out the banking stocks, it gives you a chance to buy them. On top of that, you're not allowed to short sell them. Well, I'll tell you what, everybody's going to jump on that bandwagon because why wouldn't they? And it'll boost the financial stocks. That also means that if you are outside of the United States and you'd like to participate in that little game that we're all about to get privy to, you're going to have to buy U.S. dollars in order to trade U.S. stocks, which means you have to sell your euro currencies, you got to sell your British pounds, you got to sell your Canadian dollars in order to buy U.S. dollars to buy U.S. stocks. That is a trade opportunity for us day traders. How long will it last? Well, I don't know. I'm a day trader. I'm jumping on it tomorrow if it happens, and we'll go from there. Now, if you've been able to follow that, the next thing I want to do is show you some charts which should illustrate how in the charts those fundamentals I just told you about came out first. Foremost, the charts told us this was going to happen one way or another, and I'm about to show you how those fundamentals came out in the charts first. Let's go to some charts, traders. Okay, traders, you are looking at Euro currency December daily bar. And, of course, we have been trying to keep you in tune with the larger picture with these weekend webinars. With that in mind, on 8/5, we did a video which called for a break. Then we did get that break, as you can see. Then, of course, a review on 9/6. We talked about now that the currencies have broken, they need a reprieve rally, and I will let you know when it's time to short the euro currency again. Well, the reprieve rally came, and on Thursday, 9/25/08, actually, we did the video on 9/25/08 for you to watch for 9/26's trading on Friday. So we just shot a video Thursday for Friday's trading a few days ago, right here, and told you now it is time to start shorting the euro currency. The reprieve rally has been put in effect, and now we look for downside. Interestingly enough about this chart, it coincides almost to the moment that the bailout package comes from Congress. Imagine that. Congress is about to pass the bailout package right when euro currencies decide they're going to crack. If they pass the bailout package, you're going to need dollars to buy U.S. stocks, so you need U.S. dollars, which means you got to sell euro currencies, and that absolutely came out in the charts first, traders. We showed this to you week after week, and then we showed it to you on Thursday and told you this is exactly the scenario that should take place. The technical is set up for a big piece of fundamental news to come out and knock the euro currency down, push up the dollar. Lo and behold, as soon as the technical's set up, the big news gets released on Sunday that Congress will likely pass the bill, the bailout bill. That, traders, is absolutely fundamentals coming out in the charts first. Let's go look at another one now. Okay, traders, if you think that was a fluke and it just happened to be a chart that looked right in euro currency, well, let's look at the British pound. This is December British pound daily bar. Same thing on 8/5, we said watch for the break. On 9/6, we said watch for the rally. On 9/25, video date 9/26, we said now that the rally's complete, get ready for more downside. Look at where we are now, traders. We've already broken from the 186 some odd area. We are trading in the under 182.40 right now. Am I reading that right? Yes, we are below 182.40 as we speak. The technicals absolutely showed the fundamentals coming out in the charts first. There is no way I could have made these calls on these dates properly if it were not fundamentals showing up in the charts. That being said, looks to me like British pounds, euro currencies, at least those two for now, absolutely are going to need to be sold against the US dollar rally, which will likely come if in fact and when the bailout package is signed. Traders, fundamentals come out in the charts first. Don't kid yourselves. You'll always know what the news is going to be if you know how to properly read these charts. Just to prove the point, let's go take a look at a couple of more. Okay, traders, now you're looking at December Canadian dollar daily bar. Just like the other currencies, we called for the crack, we called for the rally, and now we're calling for the rally phase to end and back down again. What's interesting about the Canadian dollar is this. We love quadruple unit patterns that almost are of the same highs and lows. You almost always go with a breakout away from the quadruple unit pattern. Indicators are pointing towards downside. Everything is pointing towards downside in Canadian dollar. The quadruple unit pattern is in place, and if you break out under it, the downside will actually work as we're expected. This is grouped in with the other currencies that we did expect this sort of action from. Then we get this nice little quadruple unit pattern on top of the fundamental news coming out in the charts first. I think that's pretty interesting. Here's another thing that you might not realize. If Canadian dollar is showing downside, and it truly does go down, do you know what else that tells you, traders? Do your homework. You will find this almost day for day. That means that the crude oil is about to go down as well. If Canadian dollars go down, crude oil goes down. The Canadian dollar and the crude that they use to make their GDP is so tied together, so closely tied, that if Canadian dollar is giving a downward signal, you can almost always bet that the crude oil will head down as well. That's the way it works. I am not telling you to run out and short crude. What I am telling you is that if the Canadian dollar goes with the other foreign currencies, which would be down versus US dollar going up, probably crude oil is ready to go down as well. Again, traders, the currencies were an absolute call. Fundamentals coming out in the charts first. Now let's go look at the US dollar and the effect that these currencies and the bailout package is having on it. Okay, traders, we are now looking at the dollar index, the US dollar index December daily bar. Once again, traders, this is one of the same charts that was in the 8.5 video calling for the up move, was in the 9.6 video calling for the reprieve down move, and was in the 9.26 video, which was Thursday for Friday's trading, calling for the down move to now end and resumption of the upward trend, right? This is all based on, obviously, fundamentals, which come out in the charts first. We'll look at what has happened since Thursday. Thursday rally, Friday rally, Sunday night. Look at how high we've gotten already. Traders, that is absolutely the fundamentals coming out in the charts first. If you would like to learn how to read charts like this and how to gauge where the economy may go based on charts that you're looking at, come on down to our site. It's www.livewithoscar.com. Grab yourselves a free membership and let us teach you how to get this analysis right. So, traders, you've seen those charts? I mean, come on. Fundamentals come out in the charts first, foremost, always. You name it. You can spot the fundamentals coming out in the charts first. I always do. I always present that to you. Now, the third thing on the board that we didn't really get to yet was commodities and metals. Traders, you'd expect that if the dollar gets a boost from this package, well, that will knock commodities down and will knock the price of gold down a little bit. Other metals especially. Gold, you got to be a little careful of because there's been this insane flight to quality into gold. You go to almost any gold coin dealer right now, they have no cougar ends left to give you. People are hoarding gold, so you got to be a little careful, but even gold will feel the effects of a dollar going higher. Why is that, traders? It's very simple. Scale. It's like this. Commodities, metals, they are priced in US dollars. If US dollars go up, the commodities and the metals go down. If US dollars go down, the commodities and metals go up. That is the way it works. not always tick for tick, but absolutely, if you're looking at the larger picture, if dollars are going up, other things are going down like commodities and metals, always, always. So keep that in mind. Make sure you do your homework. As I always tell you, always do your own homework, traders. I can be some kind of a nut putting stuff on the board. I don't even know exactly what I'm telling you about, right? That's not the case, but you never know. So do your own homework and make sure that you agree with the work that we put forth, and then maybe you can take a trade. And traders, again, these weekend webinars are to keep you in tune with the larger picture. Yes, we're looking to trade right out of the chute based on what we see in the webinar for day trading, but these are slightly longer term views, which is why on those weekend webinars I had mentioned the dates of 8, 5, 9, 6, we were telling you, okay, large picture here, here's where we are, here's where we're going, and then this is what you should do about it. So make sure that you do your homework on those currencies. Make sure you do your homework on the dollar index. There's also a good trade. Obviously, there's going to be a good buy most likely on dips in the S&P if, in fact, this package is passed. We'll talk about that. We have a trade expected to hopefully work. On our website, we have trades geared for euro currency, for British pounds. We have trades geared for Canadian dollar. And I'm looking at the indices and how I want to trade them. So if you'd like those trades, make sure you come on down to the site, jump into the chat rooms, and we'll certainly share those trades with you. All right, traders. There's so much for us to do. I got to get out there and look at markets. I know S&P is fluttering around right now, so I got to get out there and look at them. I'd like to shout out to one of our guests and one of our site members, JG Wolf. Thank you so much. JG Wolf sent us this beautiful cake. Thank you so much. Homemade. Family loves it. Thank you so much. We really appreciate that, guys. We're not asking for cakes to be sent by everybody, but hey, we sure do appreciate it. So thank you so much. All right, traders, if you'd like to give me a call, please do anytime, day or night, 702-629-4755. And please keep those emails coming. Emails keep coming in. My answers keep going out. And I love interacting through the email. So continue to send your emails, traders. Shoot your emails out to oscar@futuresanalysts.com. Okay, traders, if you don't mind continuing posting your comments on these videos, make sure you rate the videos, comment on them. It appears that your comments truly are helping the other traders out there that are lost, that can't find a home like ours or haven't found us yet. They haven't become Omniacs yet, so please gear your comments to help these other traders who are lost become Omniacs. Allow me to help them just the way we helped you. Thank you so much, traders. All right, what else is there to do here? Practically nothing, right? Are we done?
Yeah, we're done.
We're done? You're done?
Yeah,
even my son is done. Everyone's done, so I'm getting out of here. All right, traders, make sure you say this to yourselves every morning, afternoon, every evening. It'll help you keep your emotions out of trading. And you know what that is. Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.